Hey, it's Dan Moralez, and this is Homebuyer Radio, episode number 69. And this week, we're continuing to talk about construction loans. What I want to talk about is the two main differences in regards to the types of construction loans you run out there and see. There's usually two different variations that a construction loan is done with. There's what's known as a construction-only loan, or what we in the industry call a two-note mortgage. Or there's what's known as a construction permanent loan, which we in the industry call a one-note mortgage, okay? Construction-only loan means it is a loan just for the construction financing, just to build the house. And then once the house is done, you have to refinance into a permanent mortgage at that point in time. Now, negative to a construction-only loan is you have two different loans. You have one for a construction loan, and then you have one for the permanent mortgage in the end. Two different loans generally means two different interest rates. It means two different sets of closing costs, and it means twice the mortgage frustration of going through the mortgage process twice, right? So a lot of times, that is not the most ideal way to finance your new home. Now, with some lenders, that's the only option you get is to do a, what they call a two-note loan, or, construction-only loan, and then refinance once the house is done. The beautiful part for that type of loan when it comes to a lender is they're able to put a lot of risk onto you as a client, meaning that you have to qualify to take the construction loan, and then when you're done, you have to requalify for the permanent mortgage, and any changes in your financial position or good stuff like that may result in a change in the terms that are offered to you. So in the end, what that does is that helps to kind of limit some of the risk that a lender would have, and it certainly helps to limit potentially the interest rate risk they would have as well too, because oftentimes you're not able to lock in the interest rate for your permanent mortgage until you've started the process of building the house. Every lender has kind of different rules in regards to when you can lock in there, but a lot of times what that does by doing the two different loans is allows the lender to pass the risk, the interest rate risk, off to you as a client as opposed to the lender holding that. Okay. Then there's the other option, which is known as a construction permanent loan, or what we in the industry call a one-note mortgage. Construction permanent loan it's a combination of your construction loan and your permanent mortgage all in one shot. So what that means is it covers kind of everything, your construction financing as well as the permanent mortgage. So you close one time, meaning there's only one note. So you close one time, and when you close, you only have one set of closing costs. That set of closing costs covers both your construction loan and permanent mortgage. The benefit to a construction permanent loan is you have a guarantee. It typically with those loans as far as what your interest rate is going to be, not only for the construction phase of building the house, but for the permanent mortgage as well too. So you don't have to worry about interest rates, changing or going up or doing anything, that's going to hurt you during the course of construction. So those loans, do come with a little more peace of mind for the borrower. They do come with some elements of risk for the lender, and those elements of risk are accounted for as part of the mortgage process, right? So when those loans are priced, that's oftentimes built into some of the risk that the lender will, if you will, factor into the numbers in the end, okay? So we do a ton of construction financing. I started lending back in 1991, and since 1991, I've been doing construction loans, which is a really long time. But we do a ton of construction loans. The majority of the construction loans that we do are done under what's called the construction permanent loan. It is your, construction loan and permanent mortgage all in one shot. Close one time and you're done, and you know exactly what to expect as far as your rates and terms and good stuff like that. Now, with a construction permanent loan, depending on the lender that you work with, you're locking in that dollar amount of what you're going to borrow, right? So you got to be really, pretty darn sure what you're going to need to borrow in the end when it's all said and done, because not every lender is as flexible as what we may be when it comes to financing your new home. What I mean by that is, we generally are pretty flexible as far as, what we'll let you do with the construction permanent loan. Let's say we wrote you a construction permanent loan for $400,000, and then during the course of construction, you may be sold, the house that you're currently living in, and now you've got, $100,000 or $200,000 that you have that you're going to pay down towards the mortgage balance. And maybe when it's all said and done, you only needed to borrow, $200,000 as opposed to $400,000, right? Well, if you close on that construction permanent loan, with some lenders, $400,000 is your loan amount, whether you want it or not. That's what you signed up for. That's what you're getting. In our case, if you started with $400,000 and you had $200,000 to pay the balance down by, you can make that $200,000 principal reduction, and then we will adjust your monthly payment to reflect that $200,000 balance as opposed to the $400,000 that you originally started with. So that's something that is really important, right? If you're looking for a construction loan, you really want to understand, okay, what happens if I've got some extra money, I come in under budget when it's all said and done. Can I apply, any extra funds towards the principal? What happens if I have a lump sum of cash that I want to apply towards this thing when the house is all said and done? Will you recalculate my monthly payment? Is there a way to have that accounted for as part of what we're doing? I know in our case there is, but not every lender does that, right? We generally lend in all 50 states, but that is not true when it comes to construction loans. When it comes to construction loans, there are a handful of states that we offer construction loans in. We do not, unfortunately, at this time offer them in all 50 states. You can find that complete list of where we do construction loans on my website. You can find that at danmoralez.com. That's DANMORALEZ.com. Just click on the little Build tab, and you'll find what states we're currently doing construction loans in. Again, my name is Dan Moralez, NMLS number 709729. Phone number is 616-931-4629. You can find me on the web at danmoralez.com. That's DANMORALEZ.com. And again, Northpointe Bank is an equal housing lender.